What's up, everybody? This is Sun Go, the Korean Bro, and today is 2022, April 20th. And let's look at the issues. Okay, what issues do we have lately? Uh, let's check that out. Okay, Hmm. We have Yahoo Finance, Market Beats. Okay, one by one, we'll go to. Oh, we got uptrend tonight. 7% up by Upstart Holdings. Pretty good sign. Pretty good sign. Hmm. Better buy Visa Upstart. 10 favorite stocks show daily up to third point. Don't wait for a market crash. These two top stocks are in sale. Last year, the stock market proved virtually unstoppable, with a peak decline in the benchmark S&P 500 of just 5%. Both the S&P 500 and the iconic Dow Jones Industrial Average reached double-digit percentage decline in March. These surefire stocks are screaming buys following a peak decline of 22% in the Nasdaq. Last year, the stock market proved virtually unstoppable, with a peak decline in benchmark S&P 500 of just 5%. But 2022 has been a different beast altogether. Both the S&P 500 and iconic Dow Jones Industrial Average reached double-digit percentage decline in March, while the growth-focused Nasdaq Composite shed as much as 22% of its value uh, between mid-November and mid-March. This 22% decline officially put the Nasdaq in a bear market. With the pandemic-related market meltdown that occurred over 5 weeks in the first quarter of 2020 still fresh in many investors' minds, just hearing the phrase bear market can be unnerving. However, history has shown time and again that putting your money to work during a bear market is a genius move. History has shown time and again that putting your money to work during a bear market is a genius move. That's because every bear market is eventually erased by a bull market rally. Mm. In other words, a bear market is the opportune time for long-term investors to go shopping. Quite a few high-quality companies are now valued at a discount as a result of the swoon in Nasdaq Composite. What follows are three unstoppable stocks you'll regret not buying on the deep. Upstart Holdings, the first unstoppable stock you'll be kicking yourself over if you don't buy the deep is cloud-based lending platform Upstart Holdings. Shares of the company have fallen by nearly 80% from their all-time high set last year. The big worry skeptics have with Upstart is what effect rapidly rising interest rates might have on its growth potential and bottom line. With the US inflation rate hitting a 40-year high of 8.5% in March, it's pretty evident that the nation's central bank is going to aggressively hike rates in the months that lie ahead. This could quell demand for all types of loans and therefore affect Upstart's operating model. All types of loans and therefore affect Upstart operating model. However, it's my contention that these concerns are largely overblown. One of the biggest advantages of Upstart's platform is that it's driven by artificial intelligence. Without digging too far into the weeds, Upstart's lending platform relies on data from all previously valid loans to quickly approve or deny an applicant. Approximately two-thirds of loan applicants receive an immediate response with Upstart, which saves consumers business time and money. In addition to being fast, Upstart's AI-driven platform has helped expand loan availability to applicants who wouldn't have qualified under a traditional vetting process. Despite broadening the scope of loan approvals, Upstart-approved applicants aren't exhibiting a drop-off in on-time payments. This makes it even more likely that lending institutions will lean on Upstart's platform as interest rates rise. Investors should also be aware that Upstart has no credit exposure. During the fourth quarter, 94% of revenue was derived from fees and services tied to lending institutions. If the U.S. economy does concentrate, Upstart's not on the hook for any loan delinquencies. Hmm. Perhaps most exciting of all, Upstart's acquisition of Prodigy Software in 2021 allows it to push into the much larger auto loan origination market. There are ample opportunities for Upstart to thrive, and with the company highly profitable on a recurring basis, uh, now is the perfect time for opportunistic investors to strike. Popmatic, yes, indeed. This is the one that I looked into last time, the other day. Alphabet is the other one. Yes. Hmm. The Motley Fool. Don't wait for a market crash. These top stocks are on sale. Many stocks have fallen, but they likely have much further to fall due to still lofty valuations. Roku is trading at its lowest valuation in over 3 years. Uh, Despite a major migration, its short public history, despite its momentum and outstanding opportunities. A connected TV platform company Roku and landing technology company Upstart Holdings are two top stocks on sale. I don't mean that their stocks are merely down. Although it is true, both of these stocks have fallen more than 70% from their respective all-time highs. But a lot of other stocks have too. However, many of the others aren't top stocks and they're still not cheap by any means. On the contrary, stocks are generally expensive right now. Take, for example, the valuation of the S&P 500. According to Yorandi Research, the price-to-earnings ratio for this index is around 22, compared to its historical average of less than 16. And looking at the forward P/E ratio is even more alarming. The forward P/E is around 19. Um, Roku could be the top beneficiary of a massive global trend. Hmm. Okay. Coinbase launches NFT marketplace in okay, there you go. Coinbase launches NFT marketplace in beta. High inflation is a global story too. Inflation drives the cost of summer camps. Hmm. Why restaurant workers don't want to come back. Chelsea FC ownership dwindles to three final bidders. Seeking at least 8% dividend yield, Wells Fargo suggests two dividend stocks to buy. Netflix stock crashes. Co-CEO says companies working on fixing the problems. IBM sales growth top estimate powered by software and consulting. Lithia Motors crushes earnings estimate and the stock jumps. Dow Jones jumps 400 points, led by surging. Two stocks under $10. Then Morgan Stanley sees surging over 100%. Netflix loses 200,000 subscribers. Here's what Wall Street thinks. The pound's price shakeout will hurt margins. It could help the company long term. Strong insider buying puts these two stocks in focus. Strong insider buying. Which art innovation stocks are most bounce worthy? Are you sharing Netflix password? Not long. Roku, Disney, and Fubo TV stocks sink after Netflix earnings. Two strong buy stocks are flirting with a bottom. Though futures rash, bond yields fall back. Netflix identified four uncontrollable issues that will keep bleeding subscribers in a long letter to investors. Four uncontrollable issues that will keep bleeding subscribers in long letters to investors. Tesla's earnings are today. Here's what Wall Street expects. US stock futures rise as inventory try to shake off disappointment over Netflix results. Nvidia stock shows market leadership with jump to 80 RS rating. Kramer's Mad Money recap. Alchemist fund likely filling the Netflix plan, paying as shares plunge. Cybersecurity stock and long-term leader for an looks to secure breakout. Is for stock a buy as electric F-150 deliveries begin. Netflix stock plummets as viewer access Grimloud alert prompts Edge Red rethink. Baker Hughes earnings fall short despite soaring oil prices. Netflix feels the heat as pandemic boom fizzles. Netflix feels the heat as pandemic boom fizzles. Ultrish breaks the $2,000 barrier for direct indexing. IBM quarterly results beat estimates as restructuring shows progress. ASML stock surges despite sales forecast missing estimates. Alamos isn't going away if Twitter rejects him. Here's what he might pay. Netflix lost subscribers is considering a lower cost export plan. P&G stock climbs what Wall Street like in its earnings. CrowdStrike's largest beneficiary of an increased attack environment. It's still a buy, analyst says. Near-term headwinds won't derail long-term growth, says analyst. Stock market up nearly 101% as earnings per pour. And these two stocks top points. Bear market maneuvers. Okay, one by one. Let's go to this one first. Coinbase launches NFT marketplace in beta. Coinbase is launching its long-awaited NFT marketplace Wednesday with a focus on trying to create a social community for buyers and sellers. Uh, this product is more than just buying and selling. Sanchin Sixana, vice president of product for Coinbase, said, "It's about building your community. It is about making sure that you can connect and engage with them on the platform. More than just buying and selling. Uh, it's about building your community. It is about making sure that you can connect and engage with them on the platform. Coinbase wants to deepen social engagement in the NFT marketplace and create a community for NFTs in addition to a marketplace to buy and sell NFTs. Besides exploring what's for sale, users can create a profile and curate it with NFTs they've created, comment on NFTs, or start conversations with other NFT holders and sellers. Like Twitter, users can build followers and discover other collectors and creators. The community aspect has become a really important part, almost as important as the art itself. Uh, an NFT creator on Coinbase's platform. When you create a community, they're your advocates. Mm. As a single creator, I don't have a big team. So the people that share your vision, your long-term goals, those are the people you want to have engaged with. NFTs are inherently a social thing. NFTs are non-fungible tokens or a certificate of authenticity that shows proof of ownership for digital collectibles, or certificates of authenticity that shows proof of ownership for digital collectibles. The tokens are typically assigned to one of a kind digital music, sports, memorabilia, and virtual real estate. The tokens are typically assigned to one of a kind digital music, sports, memorabilia, and for virtual real estate, among other items. NFTs have exploded into more than $40 billion market over the past year, according to Chainalysis. That's up from an estimated $338 million in 2020, according to Coinbase. Artists can earn royalties from NFTs. They give them a percentage of the sale price. Earn royalties from NFTs that give them a percentage of the sale price when their creation is first sold, and each item is resold on the marketplace. That is, after the original artist first sells the NFT, the buyer could sell the NFT to another buyer in a secondary market, and the original artist would receive royalties on that secondary sale. Coinbase's marketplace is designed to be open for all, allowing users to disconnect their digital wallets at any time and take their NFTs with them elsewhere. Users can buy or sell NFTs using a self-custody wallet. That is a digital wallet where owners possess their digital money and assets because only they control the private key. The authenticity of collections will be verified through verification badges. Coinbase will rely on users in the community to report fake NFTs, as well as a team that will look out for scams, duplicates, and fakes to take those down. As an initial promotion, Coinbase won't impose a transaction fee for NFT purchases, but over time will begin charging one gradually. We believe Coinbase's launch of its NFT marketplace could be a game changer for both the firm and the NFT space, says BTIG fintech analyst Mark Primer. We believe the marketplace will provide an important source of diversification away from the crypto trading that is the source of the vast majority of its revenue at this point. And it will be an important component in what we view as an evolving, diversified digital asset platform. Okay. New information about NFT marketplace. This is mainly about building community. Uh, it's not just uh, it's not just a place where uh, you sell and buy NFT. It's more like building a community where people can come together and share their ideas on creation of NFTs, uh, good creators, bad creators, and stuff like that. It's just a place where you can share information. Hmm. High inflation. It's a global story too. Morning brief. Today's newsletter is by Brian Chong, an anchoring reporter covering the Fed, economics, and banking for Yahoo Finance. Americans are not the only ones feeling the pain of high inflation. It's bogging down almost every other nation as well. A fresh round of economic forecasts from the International Monetary Fund on Tuesday lowered global growth prospects, in part because of rising price pressures. Making matters worse, the Russian invasion of Ukraine. Inflation is a clear and present danger for many economies. IMF chief economist Blair Overgrange told Yahoo Finance Tuesday. In January, the IMF projected global growth of 4.4% in 2022. Hmm. The IMF predicts that prices in advanced economies will rise by 5.7% this year. In emerging market and developing economies, inflation is projected to clock in at 8.7% this year. Those figures make it clear that inflation is not a phenomenon exclusive to the US, where consumer price index readings from March showed 8% dividend yield. Wells Fargo suggests two dividend stocks to buy. Crescent, the first peak is Crescent Capital BDC. We'll start with Crescent Capital, a business development company with a focus on private mid-market firms. Crescent both originate and invest in the debt and equity of its target market and has built up a portfolio totaling some $28 billion in assets under management. Business development company. Okay. And what we have next? Barings BDC. The second dividend stock we'll look at is Barings, another BDC firm. Barings BDC is part of the larger Barings LLC asset manager, financial giant with over $390 billion in total AUM. Barings BDC occupies one of the smaller niches, providing credit and equity investment in mid-market companies. Occupies one of the smaller niches, providing credit and equity investment in mid-market companies, leveraging support from the stock crashes. Co-CEO says companies working on fixing the problems. Netflix see the stock crash and now airing on the Yahoo Finance Tiger pages. And according to the company's co-CEO Reed Hastings, the market reaction to the company's latest disappointing quarter is well deserved and reflects several issues that will take time to correct. Netflix. Oh wow. Minus 30%. What a great chance. Minus 30%. Hmm. We're working on how to monetize sharing. We've been thinking about that for a couple of years. But when we were growing fast, it wasn't the high priority to work on. And now we are working super hard on it. Remember, these are over 100 million households that already are choosing to view Netflix. They love the service. We just got to get paid. Hashings told investors on the earnings call. And then, two, it's really, we got great competition. They've got some very good shows and films out. And what we got to do is take it up a notch. And I'll tell you that we're all pretty. I know it's disappointing for investors, and it is for sure, but internally we're really geared up, and this is like our moment to shine. This is when it all matters. And we're super focused on achieving those objectives and getting back into our investors' good graces. We're super focused on achieving those objectives and getting back into our investors' good grace. Shares of the streaming media giant plunged 26% in pre-market on Wednesday as Wall Street analysts marked down their estimates and price targets after a shocking quarterly miss on sales and net subscribers that reflect the challenges outlined by Hastings. Here's how Netflix performed compared to Wall Street analyst estimates. For the current quarter, Netflix said it expected an even steeper decline in new users as it battles through increased competition from the likes of Apple and Paramount and tries to get 100 million account shares to pay up. The streaming service is modeling for subscribers to decline by 2 million in the fiscal second quarter, whereas consensus analysts were looking for a gain of 2.4 million. Challenging quarter for subscriber growth, and given that account sharing, monetization, and advertising supported product are 2023-2024 events, we don't expect investors to collectively allocate more capital to owning Netflix in 2022. We believe investors will want to be closer in time to the implementation of these changes and might want to see some confirmation that they are having the desired effect before re-rating the stock higher. Second quarter is generally softer seasonal quarter, but the content slate has popular returning sales series, including Ozark, Stranger Things, and Grace and Frankie. The comic slate builds the back half of 2022, leading up to a bigger fourth quarter with titles such as Green Man and Knives Out 2. Okay, so no, I get that subscribers of Netflix is much lower than consensus expected. That's why it's now down by 30%. IBM sales growth type estimates powered by software and consulting. IBM posted better than expected first quarter financial results as the tech giant continues shifting the focus to cloud computing and artificial intelligence software. Big Blue also cheered investors by saying its full year performance should be at the very high end of its previous forecast. IBM. So I get that people are positive in terms of trading, in terms of investing into a company named IBM. Two stocks are at $10, and Morgan Stanley sees surging over 100%. Rocket Lab USA. Okay, there it goes. Okay. The oldest advice in the financial markets is to buy low and sell high. The trick to winning, however, is to find the right stocks to buy and to remember that buy low doesn't always mean that these stocks can't go lower. Sometimes the best bargains really do come in at the lowest prices. There are plenty of stocks under $10 that won't break your bank and still offer substantial upside potential. How substantial? Well, one analyst at investment banking giant Morgan Stanley has been tapping two winners among these low-cost stocks, and she sees the upside beginning at 100% or better. We can dig deeper into the Morgan Stanley picks using the TipRanks database to find why these low-cost stocks are getting the thumbs up. Rocket Lab USA. First up is California-based company. They work in a futuristic niche space flight Rocket Lab is a non-governmental space launch company offering customers access to the Electron small orbital launch vehicle. Mm. California-based company that works in a futuristic niche spaceflight. Rocket Lab USA. Non-government space launch company offering customers access to the Electron small orbital launch vehicle, which about is the second most frequently launched U.S. rocket. The Electron, which boosts payloads up to 300 kilograms into low Earth orbit, is the only reusable small launch vehicles in service. Rocket Lab has completed 25 Electron launches to date, successfully deploying 112 satellites into orbit. Has completed 25 Electron launches to date. To date, Rocket Lab has completed 25 Electron launches to date, successfully deploying 112 satellites into orbit. In a major announcement for the company, Rocket Lab released news that it will attempt a mid-air helicopter recovery of the Electron vehicle's first stage in the new next scheduled launch later this month. In a major announcement for the company, Rocket Lab released the news that it will attempt a mid-air helicopter recovery of the Electron vehicle's first stage in the next scheduled launch later this month. Currently, the company complements the Electron rocket with a Photon customizable orbital spacecraft. Looking forward, Rocket Lab is developing the Neutron rocket, a large-scale reusable launch system, which will be able to deploy a 13,000 kilogram payload into low Earth orbit. Low Earth orbit or a 1,500 kilogram payload into an orbital trajectory to Mars or Venus. During 2021, Rocket Lab was awarded a contract from the U.S. Space Force worth $24 million to complete development of the Neutron's upper stage. Building on its launch program and to raise capital for its development program, Rocket Lab entered the public markets in August of last year. Building on its launch program and to raise capital for its development program, Rocket Lab entered the public markets in August of last year. The stock's entry to Nasdaq came through a business combination with a SPAC firm, Vector Acquisition Corporation, and brought the space launch company as much as $777 million in gross proceeds. Blah, 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 blah. And what do we have for second option? Joby Aviation. Sticking with the aerospace realm, we'll look over at Joby Aviation. This is a mid-cap firm working on development of a new urban commuter aircraft. Mid-cap firm working on development of a new urban commuter aircraft. Sticking with the aerospace realm, Joby Aviation. Something futuristic. Joby's proposed aircraft is an electrically powered vertical takeoff and landing model designed for the urban air taxi niche. Joby has demonstrated the concept through small-scale remotely controlled drones and is currently testing a full-sized prototype. The company is aiming for FAA type certification next year. Joby's prototype commuter aircraft uses 6 electric motors in a tilt-rotor configuration. The engines are aligned at the leading edges of the wing and tail surfaces in a layout that optimizes motor and rotor efficiency. Joby's concept plane has 5 seats, a pilot and 4 passengers, plus room for passenger luggage, and is designed to fly up to 150 miles on a full battery charge with a top speed at 200 mph. Last year in August, Joby completed a SPA combination with Reinvent Technology Partners and entered NYSE on August 11. The company realized proceeds plus cash on hand brought the balance sheet to $1.6 billion after the business combination. The company is highly speculative. Last year, while the SPAC combo wasn't planning and in progress, Joby achieved several milestones. And blah, blah, blah. So, this has got to do with vehicle, you know, it's not kind of vehicle that you drive uh on land. It's kind of a device that flies uh, like above our head. Hmm. And it will be used as an vehicle to uh, for transportation purpose, like taxi nowadays. Like taxi, you get customers and take them to somewhere else like that. This will be like taking customers and then put them somewhere else. You know. Netflix loses 200,000 subscribers. Here's what Wall Street thinks. The streaming giant isn't. Netflix stocks were slumping Wednesday after the streaming giant posted disappointing first quarter earnings, prompting a flurry of price targets cuts and critiques from analysts. Well below its guidance for 2.5 million net adds. The streaming service would have added 500,000 users had it not lost 700,000 subscribers from Russia. Pound's price shakeup will hurt margins, but it could help the company long term. The company plans to raise the price of its core subscription while cutting prices of its bikes and treadmills. This move could help sell more bikes, but will also weigh on margins in the near term. Starting in June, the firm's Connected Fitness subscription will jump to $5 to $44 a month. Cheaper prices on the company's core exercise devices have already rolled out. The Connected Fitness subscription is a key to accessing most of the features the Peloton bike and tread are known for, like classes, training programs, and stuff like that. Strong insider buying puts these two stocks in focus. Braze, strong insider buying puts these two stocks in focus. Making sense of the market these days is no easy trick. Inflation is stubbornly high rising. The Federal Reserve has embarked on a policy of rate hikes and monetary tightening in response. But there are serious worries that their new path is a matter of too little too late. The war in Ukraine and further Chinese COVID lockdowns have promised further shortage of vital commodities and products, just as supply chains were beginning to untangle themselves It's no wonder that the big market trend of 2022 so far has been a huge increase in volatility. Following the insiders is one way to find stocks that are worth buying. After all the insiders are under scrutiny from shareholders, boards of directors, and federal regulators don't trade their own company shares lightly. But how do you know which insiders to follow? But how do you know which insiders to follow? Are all insiders trade more equal? You know, mm. Um, they are not, of course. Some are simple stocks adjustments. They are not, of course. Some are simple stock adjustments to fit shareholdings into corporate salary structures. Others are related to bonus or severance compensation. But some insider trades are really worth noticing. The Insider's Hot Stocks tool at TapeRanks offers the filters to shift through these trades and find those nuggets, trades that get into the millions, and are sure to raise eyebrows. Hmm. We've used that data to locate two stocks that have seen recent insider trades of that impressive magnitude. They made for an interesting bunch buy rated equities with plenty of upside potential, according to the analyst community. Let's take a closer look. Braze. We'll start in the world of multi channel digital marketing, where Braze, New York based company, offers cloud based software package for customer engagement. Braze. So insider buying company. Hmm. Okay, there you go. Cloud-based software packaging for customer engagement. The platform is scalable with tools for data analytics and optimization, giving marketers options for retail and e-commerce, digital marketing, where Breeze digital marketing company. The platform is scalable, giving markets options for retail and e-commerce, media and entertainment, customer onboarding, and improved acquisitions. In short, Braze makes it possible to connect customers with brands. The company is no newcomer to the digital marketing world. Hmm. It was founded in 2011 and has built up its niche with a loyal enterprise customer over 1,300 strong. Braze saw its users sent over 1.5 trillion messages through its platform in fiscal year 2022 and saw 64% year over year revenue growth to boot. All of that, so if it was founded in 2011, so it's been so long. So it's not like a new company. It's been, doing its own thing to um, have growth, right? All of that helps explain the company's eye-popping IPO. Braze went public on November 17, 2021, putting 7.5 million shares up for sale directly at an initial price of $65 each. The shares jumped up to $95 early on their first day of trading and closed that day north of $93. The company raised more than $435 million in gross profits from the sale and reached a market value of $5.9 billion. Since then, however, the shares have fallen by half, and the company's market cap now stands at $4.38 billion. From an investor's perspective, however, there is still plenty of potential here. Braze has issued two quarterly reports since going public and shown consistent year-over-year revenue growth. For fiscal third quarter 22, the company showed $64 million at the top line, up 60% year-over-year. Quarter four, the number grew to 70.4 million, up 64% from the prior year. The insiders aren't the only bulls here. JMP's five-star analyst War Evans is enthusiastic about Braze, writing, "We like Braze for several reasons. The company is disrupting a large and growing total addressable market opportunity." TeraWulf. TeraWulf is a Bitcoin miner, one of the many companies that have formed to ride the mounting crypto wave. TeraWulf. I'll skip on that one. Most bounce worthy. Popular innovation investor Cathie Wood of ARK Invest has seen her funds sink at a rapid pace over the past few quarters. Her flagship ARK Innovation Fund has already lost over two-thirds of its value from peak to trough, thanks to a more hawkish Federal Reserve. As the Fed proceeds with its rate high schedule and the possibility of a trouble point high in May, rates on the 10-year note yield could easily continue to surge, adding even more selling pressure to ARK and the high multiple growth trade. Despite the magnitude of the headwinds and the damage that's already been done to the outline of funds, Wood has not changed her stance on investing in innovation, insisting that investors think long term. It is respectable that Wood has doubled down on some of the fallen darlings within the ARK basket. It is respectable that Wood has doubled down on some of the fallen darlings within the ARK basket. Eventually, such beaten down names will bounce back with a vengeance. Teledoc. Zoom Video Communications. Are you sharing Netflix password? Not for long. Your streaming subscriptions reshaped Disney and turbocharged Netflix. Now comes making more money off of you. Okay, I get that. Subscribers of Netflix goes down, and Netflix is having a hard time. But then they're gonna get over, cause companies like just like living creature, they can certainly have up and down on their way to reach their goal. They will have up and downs, and that up and downs will be like working as a fundamental base where they can grow even more. Mm. Broke with Disney and Fubo TV stocks sink after Netflix earning. Streaming stocks tumbled Wednesday after Netflix lost subscribers in the first quarter and said it expects to lose 2 million net subscribers in the current quarter. Two strong buy stocks are flirting with a bottom. Rumble on, okay. What we at? OLO, and we got Rumble on. Keep range, okay. The stock market has fallen short the year, and some stocks have fallen more than others. For investors, however, that brings up opportunity. Just because a stock has fallen quite a bit doesn't necessarily make it a bad investment. The trick for investors is to tell the difference between stocks that are cheap at their new low prices and stocks that are truly broken. That's where the Wall Street approach comes in. These expert stock pickers have identified two compelling tickers whose current share price land close to their 52-week lows, noting that each is set to take back off on an upward trajectory. The analyst sees an attractive entry point. Using tip range database, we found out that the analyst consensus is rated both a strong buy with major upside potential also on tap. Let's take a closer look. Rumble on, and what do we have? OLO. It's gonna be my last article tonight because I'm getting a bit tired. I mean, let me just go over the title of articles and then we'll wrap this up. Okay. Netflix identified four uncontrollable issues that will keep depleting subscribers in long-term. Long letter to investors. Okay, cybersecurity stocks. Palo Art Networks, Mimecast. Skip on this one. Skip on this one. Skip on this one. Warren Buffett's bear market maneuvers. Okay, I'm getting a bit tired tonight, so this is it, and I'll see you guys tomorrow. Okay, bye bye.